All right, so Dave Farber, welcome back to F.A.C.E. So we've been talking about the metals, Dave, and I know that you're a proponent of uranium, and it's great to have you back. Welcome back to F.A.C.E, Dave.
Thank you so much. Can you hear me okay?
Yeah, loud and clear, my friend.
Awesome. Well, hopefully everyone's having a great start to the week, despite some of the bearishness out here.
Oh, I love it. Down is faster.
Sounds good.
All right.
Dale, do you want me to share
Sure,
my
yeah.
screen at all?
Yeah, Dave. So, you
So it's
know, my associate Steve was talking about pullbacks in metals, began in earnest last week, and even copper and industrial, which is kind of a risk on metal. I'm wondering if there's any kind of retrenchment in uranium. So you could go ahead and share your
Sure.
screen, buddy.
Yeah, I'm trying to figure that out right now here.
It's that green box. It says share screen on the drop down.
Right, I'm trying to see where the entire webinar just went on me. Okay, here we go. All right.
There we go.
So let's dive right in. Okay, apologize for that, guys.
That's okay. No problem.
So here's the URA ETF, and we'll use this
Wow.
as illustration here. And it's been a heck of a run since we last spoke in November. In fact, I think our last conversation marked the bottom of the pullback, and it's been up ever since. But yeah, this uranium has not been the only metal, base metal, that's done incredibly well since that point in time. But this one has just, the fundamentals finally have caught up, or perhaps the technicals have finally caught up with the fundamentals. And how the truth is, we haven't even broken out yet, right? If you look at this is a range since 2016, can get extended all the way back to 2011. And right now we are in this double top formation, which is no surprise that we pulled back some from the highs here over the last couple of days, particularly Friday. I think the sell-off in the metals really took down all miners, including uranium. But even if this pulls back and creates kind of a bullish flag here for a couple of days, if not weeks, this is a weekly chart, so
doesn't look like it should trade back under 12.5 to me, Dave.
No, I don't think so either. I think any pullback, even if it pulls back, will probably be short-lived. I would be surprised if it drops below that 1540 area around here. It's possible if the markets sell off greater, it can fall towards those 26-week moving averages. But at the end of the day, uranium wants to move higher. There's still so little knowledge about this sector. And I think the opportunities are fantastic. Now, for us and our subscribers, we had our best year. I mean, personally, I had the best year trading and investing in my lifetime. And it's in large part due to uranium. Some of these equities are up anywhere between 300% and 500% off their lows, some even more than that. And if you just expand your horizon and you look at it from a weekly and a monthly perspective, some of them are just now getting started in breaking out of their bases. So pretty exciting stuff in the sector.
Do you book anything? You know, it's not a profit till you take it. You take partial positions off to ring the register, or you just stay net long?
You know,
hold on for dear life.
It's a great question, and knowing what happened back in the 04 to 07 bull market, where there were 35 to 50% pullbacks, that could be quite gut wrenching. I was too young to really participate in that one, but seeing the charts there, we are rebalancing. So there are some names that have, like I said, gone up 500,000%. So we take some profits there and rebalance into some other names. But for the most part, I'm not a believer that you want to start playing the guessing game, because you can miss out on the next run, and it all depends on how one is investing, right? If you're investing in a tax-free account, then you can have a lot more freedom to sell a little bit of the froth at the top. Most of my largest gains are actually in taxable accounts. So given where the taxes are these days, I'd rather hold on and just experience the long-term gains, because I do and I do expect to see some of these names on our watch list becoming 20 to 50 to 100 baggers potentially. So
I'm an old timer, and I've heard that I don't want to take liquidate positions because of all the capital gain taxes I owe. And I'm talking back in 2000 when the dot-com bubble started to break, and people would come into me and I go, well, you could always just, flatten out, get to the sidelines. They go, oh, well, I'd have to pay too much in taxes for capital gain. And they ended up with capital losses. So, anyway, I don't think it's the best contingency for holding a position, tax consequences.
Yeah, you're absolutely right. You're absolutely right, and
I'm just pointing it out because I've seen people do it, and they should be grateful that they have capital gains to pay taxes on, instead of saying, "Well, I don't want to pay the tax man," and then seeing the paper profits dissipate. That's all. Just from an old man, okay, buddy. Just a little something from an old man.
Yeah.
Okay. But great call, Dave. I know. I mean, you've been on top of this, since you and I have been talking. What a great run. Are we starting to get some news? I think something out of Europe, some of the new nuclear reactor technology. Do you think if Biden finally becomes president, that he's going to go that way? I don't know if he talks about it. Go ahead.
While I'm no fundamental expert on the sector, I defer to some other great experts there. Well, my due diligence in the sector is basically there's money pouring in. Biden, the Democrats have bought into uranium becoming part of the ESG space, and focused on they recognize that uranium is a very, very important part of their agenda. And when you're looking at the restarts in Japan and all the construction of reactors in India and in Europe and in China and across the United States, it's the fundamentals are all aligning. And we have to, the reason why I look at charts from a weekly and very often monthly perspective is because perspective is so important when you're talking about a sector that's been down for 12 years and has just bounced. If you take away those March lows, because I think that was a liquidity event, but in the case of URA, you just bounced from $9 to $16. That's not such a big move in the grand scheme of things. When URA used to be $50 to $100 a share in companies, this is, I think, the first inning is largely not even begun.
Are you expecting those historical highs to be achieved again?
Anybody's guess. I mean, I think the fundamentals are there that the price of uranium will probably settle into anywhere between $60 and $70 a pound, but overshoots are always possible, and I would not be surprised to see an overshoot to well above $100. And if were that to occur, like I said, you're gonna see some of the names in the sector creating life-changing returns for some folks.
Okay, and have you noticed that it thrives more with a weak dollar than with a strong dollar? Because we've had some pretty extreme dollar weakness during the run that we've recently had since you and I last talked. Dollar's down pretty hard up until last week.
Right. I have not found any direct correlations between uranium and the dollar. I think that there is some. I have seen some correlations between uranium and precious metals, where the mining stocks tend to be bunched into with the mining stocks of the precious metal miners.
Okay, Dave. What else is on the docket?
I think in general the theme that I'm seeing right now is inflation, and I mentioned that last time around as well. You step back and whether you look at let me pull up a couple of these here. emerging markets is an area I've been watching, right? I mean, they've absolutely broken out, and while pullbacks are possible and probable at some point, possibly we're starting one right now. I think this is unequivocally bullish trend that's starting in inflationary assets, commodity based currencies, and commodity based countries. Another thing that I'm looking at very interesting right now in the same theme is bulk shipping. So if you look at the bulk shipping ETF BDRY, that's breaking out of its base as well, right? So, and this is something that's been very volatile. Every time we seem to buy in, it seems to drop back. But if you just step back, notice that this is breaking out of a base. Momentum is at its highest point in a couple of years now, and I think it just goes to show you kind of what we're seeing in energy, right? Your last guest spoke about energy, and while we still have not broken out in energy, I think we have a little bit higher to go before a pretty deeper pullback potentially. But the point is that you're looking at a lot of these areas that suggest that inflation is picking up. Copper is another area. Well, here we go. It's possible.
Can I ask you a question
Sure.
regarding BDRY?
Absolutely.
Is it like the Baltic Dry Index, which is kind of one that people have been talking about for years?
Well, this is not the index. This is an ETF.
Do you know what I'm talking about?
Uh-huh. I do.
You know, are they related?
They are.
Okay.
And
so it's not an ETF. This is the ETF on the Baltic Dry Index?
Correct. This is the ETF of the basket of stocks that are probably underlying that index.
Okay.
So we're seeing a breakout. We're seeing a bullish crossover here of the 13 and 26 moving average. So those are some of the asymmetric areas that I look at right now. Another one, obviously, that's been a little bit top of the radar with the Biden win is the marijuana sector. That's starting to break out right now as well. And these are just the beginning of new trends. And there's just a lot more upside, I think, before any reasonable pullback. Another one that we've been on top of for quite some time are the regional banks. A little bit more boring, but this is very, very connected to interest rates. Yeah. Interest rates have broken out, and well, it's hard to say they've broken out, but 10-year interest rates have certainly broken out from where they were.
And the 1% resistance we got through.
Yeah, so I think we're headed to 1.3 to 1.6 on this run. There will be pullbacks along the way, but again, it speaks to the theme that I'm seeing in that you're gonna see a period, perhaps a decade, of commodity related investments doing incredibly well, whereas in the last decade didn't do much at all. Perhaps similar to kind of what we saw in the 70s. It's a possibility where equity markets don't do as well, but commodity related stocks and countries and currencies will really outperform during this period of time. One more point I like looking at in my analysis is the high yield index option adjusted spread index here. And what this shows is the spread between the high yield bonds and the more higher quality bonds. And so the lower the spread is, the better the credit quality in the overall economy is. And you see here, even though this is still kind of a bullish wedge here, but it's breaking down, and that's a good sign. That's a good sign for just the general health of the economy. So when I put all those together, pullbacks are healthy, but at the end of the day, you're seeing a lot of really good long-term trends just now starting to break out. And I don't think it's the end of these trends. I just think it's the beginning. Here's another example, microcaps. These are the microcaps against the S&P 500. They broke out of a multi-year downtrend, and now they're just starting to break out and close to, I think, this overbought territory, which when it gets to that area is when you get some of the largest gains, actually. And I do want to touch on, before we end here today, is crypto. It's not an area that we invest in heavily. Simply, I just don't understand the fundamentals. But when you look at this chart of Ethereum, and this is something we've been talking about to our subscribers for quite some time, this is an arc, and that's one of the most bullish long-term charts. And we basically hit its target around that 1400 area this weekend. And so pullback, perhaps a sharp pullback, wouldn't surprise us at all. But at the end of the day, these cryptos are very likely going to break out to much higher highs at some point in the future. So it's pretty interesting times. There are
along the world, Dave.
Yeah.
It doesn't matter. You could buy anything right now.
Yeah. So I think
feel that way, do you?
It does. I think 2020 is going to be a very interesting decade. I think there's going to be a lot of volatility. There's going to be a lot of surprises, but I think that global equity markets are breaking out, and I don't know what to make of it, because I understand all the reasons why the markets might need to fall, right? There's just chaos everywhere. But the amount of stimulus that's going on around the world, both fiscal and monetary, at the same time, and with the technology that's being invested in global markets, it's pretty exciting, actually. I think there's some great trends that we're spotting, and we shared a couple of these with you guys, and we'll continue trying to identify more as they come. But there are some asymmetric opportunities in sectors that have done nothing for 10, 20 years.
Okay, so Rip Van Winkle waking up with David Farber. So Dave, best way for people to stay in touch with your work or contact you?
Sure. The best way to do so is check us out at moneyology.com. That's MONIOLOGY. You can also send me a note at dave@moneyology.com. And I'm active on Twitter. Handle is @moneyology. Try to post a lot of free content. And the key thing for me is education. I don't like giving advice in the terms of what to buy and when to buy it, but I want to empower people to see these charts and understand them, and really determine their own personality, investing type, and make their own decisions and have conviction, because volatility is the name of the game for the markets. And I think most people, they try to find a trader or two to follow, but in the end of the day, if they don't have conviction in their own investments, then they're going to make mistakes that can cost them dearly. So it's all about education.
Okay, well, thanks for edifying us today, Dave, and congratulations on a lot of your positions coming home.
Thanks so much.
I know you're having a happy New Year, so good luck the rest of your life. How's that? Did that cover everything? Best wishes the rest of your trading career, buddy.
Thank you so much. Have a very happy New Year. Talk soon.
All right, Dave. That's Dave Farber at Moneyology. And Bruno, it's at Moneyology. So all you have to do, MONIOLOGY on Twitter. And yeah. And that's a wrap. And we'll see everyone for Turnaround Tuesday. Remember, oh, you're welcome, Brock. Yeah, thank you, Dave. There's Dave right there putting it up, and there's his website. So don't just count your pips, count your blessings. See everyone for Turnaround Tuesday tomorrow. You're welcome, Ariel, Scott. Adios.